Thank you. Okay, good morning, everybody. Oh, sorry, not good morning, good afternoon. There's a good start. Appreciate everybody who's dialed into to this Innovate Finance Spotlight event. Today's subject is one that's very close to my heart. It is a spotlight on SME finance. I'm very pleased to be joined on today's session by a number of excellent guests, excellent panelists. So we have Andrea Reynolds from Swoop. We have Zoe Newman from Capital on Tap. We have Sinead McHale from Satago, and we have Chirag Shah from Nucleus Commercial Finance. So we have a very, very good spread of expertise for today's session. My name is Simon Curiton. I'm the CEO of Funding Options. Some of you may know the platform. So we are a leading platform for SME finance. But I'm not going to be the one answering the questions or necessarily casting opinions on today's session. I will leave that for the guests on today's show. Today is an opportunity, I think, for everybody to hear from some of the key players in the market. So everyone who's participating on this panel has a unique approach, I think, to providing services to SMEs. So it's going to be really interesting to see the differing opinions and things that we tease out during today's session. Just as a bit of backdrop before we get into the questions, I think it's probably fair to point out that the last 12 months have been incredibly tumultuous for everybody, be it the players on the call today, but most importantly SMEs. So the last 12 months I think have been an incredible roller coaster. We're still not off that ride. Obviously the world is developing, the UK economy is developing, but we're still very likely to see, I think, a number of twists and turns as time goes on. There's been some challenges, clearly, but there have also been, I think, a number of opportunities that the pandemic has presented. And again, I think we'll start to get into the discussion about those today. Certainly overall, I think it's also fair to say that COVID has really elevated the conversation around FinTech's role in SME finance now and going forward. And I think that's incredibly important. So this is where I stop talking and I'm going to hand over to my esteemed panelists to introduce themselves in their own words, introduce their companies, and talk a little bit about their unique approach to providing services to SMEs and what those services are. So Andrea, I've actually got you slated to go first, if you don't mind. Over to you, please.
Sure. Thanks, Simon. Thanks for having me this afternoon. So good afternoon, everyone. My name is Andrea Reynolds, and I'm CEO and founder of swoopfunding.com. We are an online marketplace for SMEs. So our customers can aggregate all of their financial accounts in one place, and then we match them to every form of funding that's available to them, personalized to their financial profile. That's everything across from loans, grants, equity investment, and also surfacing cost reductions for them across their service providers. I suppose, why do we exist? We exist because we want to help SMEs make the best money decisions every single day of the week. And for us, loans are not always the answer. And I think this will become part of our discussion on this session is what's out there for SMEs, what's the landscape looking like over the next 12 months in particular. And so, yeah, that's what we're doing. And I guess we can discuss some of the trends we're seeing on the platform as we go through our discussion this morning. Thanks.
Fantastic, Andrea. Thank you. Zoe, over to you.
Hi everyone, my name's Zoe Newman. I'm the head of international expansion at Capital on Tap. So Capital on Tap is a small business credit card provider. We just focus in on supporting SMEs, more the kind of micro, small end of the scale, sort of sub 2 million revenue is kind of our core business. And we've developed a credit card that is kind of all about that area of the market and providing the best possible features for those types of customers. So we have integrations with accounting packages. We have a really streamlined journey to kind of onboard SMEs as quickly as possible so they don't have to pull up lots of paperwork and kind of pull spend a lot of time preparing for kind of the finance availability. And then we also offer a rewards product as well. So it's a flexible credit card where they can be dropping in to using sort of the working capital function and making a minimum monthly payment if they need to some months, and then switching back into being a transactor and paying off in full and benefiting from our rewards product as well. So just providing a bit of flexibility to the customer. And my area on international expansion is quite exciting, as we've launched into 2 new countries outside the UK. So we launched in Spain about 18 months ago now, and have really built up the team and business over there. And we just launched into the US 2 weeks ago. So that's keeping me busy.
Amazing. World domination beckons.
Hopefully, it's the plan.
Thank you very much, Zoe. Sinead, over to you, please.
Thank you, Simon. I mean, that's a hard act to follow. We don't have world domination on our roadmap yet, but I guess watch out, Zoe. You never know what's going to happen over the next few months. So my name is Sinead McHale. I'm the CEO of Zotago. Zotago, I guess, is quite different in this space because we're not only just a single invoice finance provider, but we are an end-to-end cash flow management solution. So take a very, I guess, different and unique approach to the space. So we just don't focus on providing the single invoice finance. It's more about providing this ecosystem to encourage kind of sustainable growth for that SME, to help them protect the business, and for longevity, to secure that kind of I would say financial planning in the long term. But it's very much about giving them access to short-term cash flow solutions, i.e. by single invoice financing. But then that is very much kind of wrapped around with credit control and risk profiling. We also tend to take slightly different approach in that we have access to real-time data from accounting software and open banking. We're very much have moved away from a paper trail. It's all about live access to the accounting software and really basing decisions on that data, but also how an SME will behave. So I guess, we'll touch on this later, but we've tended to move away from just focusing and profiling on a credit score. It's also about how SMEs behave. Do they have lots of cancelled direct debits, lots of credit notes? How do they generally manage their cash flow? And it was something we kind of introduced probably just pre-COVID as a tester, but we've just seen with what's happened in the last kind of 12 months, it's definitely become a much more integral part of our decision making, rather than just taking that single view of a credit score. And I think that for us, that'll be our strength, if you like, over the next kind of 12 to 24 months, and how we see the market in the UK specifically moving.
Fantastic. Very, very interesting. Over now to Chirag Shah from Nucleus. Chirag.
Thanks, Simon. I'm Chirag Shah, founder and CEO of Nucleus Commercial Finance. Over the last 10 years, we have lent just shy of £1.9 billion to UK SMEs. I mean, as a business, we are a multi-product offering, so it's not just a single product. At the lower end, we support businesses with loans of £3,000. And at the larger end, we can do loans up to £25 million. And over the last 10 years, I mean, everyone here is talking about open banking, data. We have gathered loads of data across various businesses. And it's allowed us to really build our models and build our underwriting in a way that we can turn around decisions very quickly. For us as a business, the focus is on creating the best user journey. And when we say the best user journey, it's about minimal number of inputs, us having access to the data from various sources ourselves, and us being able to provide a quick decision to the users. And that's really, as a business, what we are focusing on. And we will continue to focus over the next 12 months.
Fantastic. Really appreciate that. So my next question, what I want to do here is really sort of frame the conversation that we're going to have this morning. And I want to do that by asking my panelists to articulate what they think the key problems that we need to solve as ecosystem participants in the market are. So again, I'm just going to go round through the group, starting actually with you, Zoe. So what are the key problems in your eyes at Capital on Tap that the SME finance sector is facing today? You could name one, you could name two, three, doesn't really matter, but what's your sort of top three things that you want to get your teeth into?
Yeah, I was going to, I guess, highlight some of the challenges that that we've come across over the last 12 months and through kind of the COVID period, particularly, it's as you mentioned, it's impacted small businesses in such a challenging way and made things so difficult for companies through this time. And that has therefore, I guess, impacted the small business lenders and kind of the other alternative fintechs in the space. So just a couple of kind of key things that we've sort of seen as challenges. So kind of right at the very beginning when COVID first hit and the lockdowns were happening, we were obviously faced with lots of customer queries, a lot of customer concerns over repayments. And so just having to quickly make a plan and to adapt our focus onto kind of resolving that, trying to get customers through to support as quickly as they could, where kind of speaking to some people, they were spending hours on the phones to the banks trying to get through. It was, we weren't that bad, but it was kind of multiple minutes, it was outside of our comfort zone, and trying to fix that and kind of how we could be supporting those SMBs in that really difficult time. And so kind of leveraging then our technology and our systems, being an alternative fintech kind of lender, meant that we could quickly get on the cloud. We would quickly move to remote, and that was quite streamlined. And then it was kind of how did we use the technology that we built to be supporting those small businesses going through that really difficult time. So I think that was kind of the one sort of really significant challenge, kind of the middle of last year. We've then obviously seen the challenge with the government kind of lending programs that have come in, which were super important, and small businesses really needed that help. But kind of an interesting dynamic with the alternative lenders in that space and trying to kind of navigate through seeing kind of a reduction in demand over the last few months. So for our kind of, I guess where we're still sort of seeing things now is we're seeing kind of a positive, particularly with our customer engagement, where customers are using our credit card. As I said, they can be using that as kind of their go-to business spending card. And so they don't need to be kind of using it as a loan product. So they kind of have that flexibility, which has been really beneficial for our business, and kind of meant that we've still kind of maintained that engagement with customers. And then just kind of really hoping that out of the end of this and over the coming weeks, as businesses are starting to reopen, it's just going to be a super interesting time where there's going to be a lot of demand for working capital. Restaurants are going to want to be going out and hopefully spending lots of cash on food and drinks and starting to get back to life. So yeah, just I don't know if that kind of directly answered your question, but just a few of the different challenges we've faced and kind of how we've got to the point we're in now.
Fantastic, appreciate that. And Sinead, what are the problems that Cetargo is focused on solving? I think you're on mute there. Sorry.
Sorry, I was on mute. So I guess similar to some of the points that Zoe has raised, you know, the government scheme came into place last year with Sybil's and Bounce Back, and that really impacted the way that Cetargo operated. So we kind of had to reassess where we were in the market, how we were positioned in invoice financing, did we apply for Sybil's, like all of those kind of considerations, but also deal with like a significant increase in volume with customers coming to us, not just looking for lending, but obviously general support, because we offer credit control and the risk insights as well. So we kind of had the funding on one side, but also like, you know, the late payment piece on the other side. But I guess the immediate things that we did see that year on year, we saw revenues drop for a lot of businesses that are on the Cetargo platform by 50%. So obviously, as an invoice financer, that really impacted us. If there are no invoices, you know, we can't obviously provide that solution. So it was kind of reassessing where we were, kind of looking at what was best for customers and kind of partnering up or working with other lenders that were more suited to what those SMEs needed. So I think there was the shift in the way that we operated. There was also the security. We had to take that kind of piece into consideration as well. We typically wouldn't have taken PGs and debentures. We kind of had to reassess that. It's always something that we have not wanted to do based on the access to data that we had, but I think just because the way the market was so fluid at the time, it was something we had to consider. I think another key thing that we had specifically within invoice financing was this threat of invoice fraud. I think there was a lot more, we had to be more, aware of that. And thankfully, the tech is quite savvy in that we're able to pick up like fraudulent invoices, and we track behaviors, etc. So we're able to identify if invoices are of an unusual size, or just the relationship between the buyer supplier is quite new. So I think it was just reacting quickly to respond to those situations that we hadn't obviously planned for. I think one of the other things that we saw, just based on what we see in Fatago, is like DBT, so days beyond terms, because we can track that data. We saw like across a lot of sectors, an increase went out between 20 and 40%, depending on what that sector was. And so that creates this burden of unpaid invoices. So again, this is where Fatago could slightly shift the focus to being just an invoice finance solution, to that kind of virtual credit control. And we saw significant uptake in that side of the product. So I think like immediately they're probably the core things that we were looking at. And then probably final piece was just that we had to reassess the way we were operating. Like right now, the focus has got to be on renewal, recovery of the market, and just reinventing the way that Fatago positions itself to help these SMEs trade out of the next few months. And I guess, Civil's bounce back are nearly finished. We've got the recovery loan scheme coming up. I'm going to say I don't really actually know that much about it, so I don't really know where Fatago will sit in that. So it's learning to adapt to that as well, and make ourselves relevant to what's going to happen in the next 18 to 24 months, I guess.
Yeah, really interesting. We'll come back to the recovery loan scheme and get everybody's feedback on that, I think, shortly in the session. But certainly, I think, as you've already articulated, everybody's been pushed somewhat, maybe reluctantly in some respects, out of their comfort zone, and everybody's had to pivot and respond accordingly. So yeah, Fatago's definitely done that very successfully. Chirag, how about from your perspective at Nucleus? What are the key problem areas that you're focused on solving?
Yeah, I mean, so a lot of the points have been covered by them already, but just to add to that, I mean, as a business, what we saw was, in general, we make collections calls. We have direct debits being processed every day pretty much. But the volume of calls during the COVID period that we were making, or where the customers were calling in beforehand, almost quadrupled, especially at the initial lockdown around March and April. And the average time we were spending on the call was 5 times more than what we were used to historically. So overall, when you look at it, the amount of time we were spending on dealing with customer queries was almost 20 to 25 times higher than what we were used to in normal environment. And as a business, I mean, one of the benefits of having full cloud infrastructure and spare capacity in the teams was that we were able to really cope with that surge. We wouldn't be able to get the right answer every time in the short span of time that we were expected to. But I think it was a very challenging period across the business and across the whole market, not just from a lender's perspective, from a borrower's perspective as well. And yeah, we all dealt with it, but it was a pretty challenging period. But if you leave the lender specific things aside and just as a sector, I think a couple of things which everybody's been talking about for a long time are, I would say, awareness and perception. Even after CBILS and the government-backed programs where the alternative lenders have played a big role. I mean, we have lent almost 200 million under CBILS, right? But even then, in general, the market still views banks differently. The perception is different. We are still considered alternative and as a backup option to a bank. And that perception needs to change. We are all working towards it. A lot of lenders are putting in a lot of effort towards it, but that is something which has been a concern for a long period and continues to be. And while progress is being made, there is still a lot of room for the whole sector to improve that perception. And I'm guessing from your side as well, Simon, you see all the lenders, you deal with a lot of customers. I don't know what your take on that is.
Yeah, look, it's a great challenge, and I wholeheartedly agree. I'm sure the other panelists do as well. The alternative finance sector plays such a critical role in the UK economy today, and I think the reality is that it's not a level playing field when it comes to the overall lender landscape, and that's clearly something that has been a topic of very hot, a hot topic of conversation over the last 12 months, particularly when we first went into the lockdown originally, when COVID first reared its ugly head. So it's a conversation that will continue, and certainly, like you, we believe that perception needs to change. And I think it's going to be vital for the ongoing recovery that we see the alternative finance sector and all of its participants, lenders, aggregators, platforms, introducers, whatever you want to call us all. We all have our role to play, and I think that's going to be absolutely critical to the economy going forward. Maybe just switching across to Andrea. So Andrea, obviously at Swoop, you have an incredibly broad array of services that you provide to SMEs. So I'm sure you'll probably have some quite unique takes on what impacted Swoop, what didn't necessarily. Over to you, please.
Yeah, I think, Simon, you and I will both relate to the fact that we're marketplaces. So we need both sides of the marketplace to be functioning and being optimized in order for our models to work. So absolutely everything everyone has said here, Simon, you and I have felt as well. So if Sinead, Chirag, Zoe are feeling it, then we're feeling it too. I think from our perspective, so the challenges, of course, were good challenges, huge increase in customer demand. And I think we were grateful that we did have grants available on our marketplace, and particularly now, the real demand at the moment from a lot of customers is, I've taken on my first loan, I'm indebted, I do not want to take on more debt. How do I get my business reopened, get back on track? What are the non-debt solutions that are out there in the market for me, because I need to survive? So I think there's that element of we all face a period now where SMEs have unprecedented levels of indebtedness. I think the other challenges we face are the strength of businesses, and I absolutely love what Sinead is talking about in terms of how do we assess the credit worthiness of SMEs moving forward. And I do believe the smartest thing to do is use all of these data sources available to assess the strength of an SME and their ability and their appetite to make repayments when they take out a facility. So I see it as a temporary challenge, but there's nothing better than a challenge to help us all get there faster with the solution. So I think credit worthiness, credit scoring, the emergence of better alternative credit scoring is going to be one of the trends that we're going to see in 2021 and moving forward. I think some of the other challenges that probably we've all faced in terms of whether SMEs see us as alternative finance providers, digital marketplaces, what, you want me to hand over my bank details? Like all of these perceptions that we've all faced because we've these amazing digital solutions like Nucleus and Satago, but ultimately they function better where you're sharing data. And I don't know whether you can concur with this, Simon, but we certainly noticed a huge adoption in terms of open banking, cloud accounting integrations. And so that challenge we thought was going to be a much longer term play of convincing our SMEs to share their data for the betterment of their journey. That's actually reduced. So I think there's pluses and minuses in all of this. But I do think the challenges for the sector, I think we should just drop the word alternative. Why do we use the word alternative for alternative? It's just lending. And I think what's coming next is the banks are going to be pretty constrained in terms of their lending capacity for the year ahead. Yes, every alternative lender has had essentially the government as their biggest competitor over the last 12 months with bounce back loans. That now ends. Where do we move to? Banks will be constrained. And so I think alternative lending will just become the mainstream lenders within the economy. And I think the challenges we have is just overcoming those reservations that exist. But I do think we've accelerated a lot of the digitization process through COVID, and don't know if that's been your experience so far, Simon.
Yeah, very much concur. I mean, you've called it out very obviously. Alternative finance. You know, it is. You're right. It's absolutely. We shouldn't be thought of as an alternative. You know, who are these? You know, what is this sector that's arisen from nowhere and sort of has this different perception? For me, I think absolutely the quicker that can become accepted in the mainstream, you know, that will only be for the betterment of SMEs, for the economy, etc., etc. You touched on a couple of points there that I just want to develop on now, if that's okay, Andrea. So the big themes, right? So you touched on open banking, open finance, digitization, acceleration of digitization, etc., etc. So I'd love to hear from the panelists what you've seen already as the key trends. Again, we've touched on some of them. What do you think we're going to see more of in the coming 12 to 24 months? And what are the biggest opportunities in your eyes? And again, we've got different types of players within the ecosystem, but what are the biggest opportunities for you to really advance SME finance or finance in the UK over the next 12 to 24 months? So Sinead, if okay, I'm going to start with you, please.
Sure. So again, I'll base, I guess, on what Satago was saying and what we've experienced firsthand. A key shift in the way that I guess we've been operating and where we've seen engagement from customers is via their accountants. I think historically people would have gone to banks, brokers, etc., but we're seeing a lot more engagement from accountants, and I think they've been like almost thrust into it. I mean, accountants typically are closer to the SME and they know what's going on from a financial perspective, but they may have been hesitant to get involved with this idea of like introducing lenders or recommending lenders, etc. But I think because of obviously because of lockdown and civils, etc., they've had to make that jump. So we've seen a lot more engagement for accountants, and you know, like this idea that you don't have to be like a corporate financial advisor just to identify that your SME has got a cash flow gap and be able to present them with some potential funders that can help them fill that gap. So that's definitely a huge shift for us. And it's also changed the way that we are now offering Satago and how we're working with accountants. I think that would be that's one significant piece. The second thing for Satago, and I think this is a shift in what I would call just the general ecosystem, and it refers back to what you were saying, Andrea. I think that so we signed a partnership with Lloyds Bank in Q4, and I think that's demonstrative of what's happening in the market. That you've got tier one banks who have, you know, they're capitally very secure. They've got huge customer base, but maybe they don't have the digital approach that something like an alternative finance provider can give. So I think COVID and what's happened in the last 12 months has propelled those relationships, and you know, the Satago Lloyds partnership was born out of that. And I think it's heavily supported as well by, I think it's the FinTech pledge that was introduced by Tech Nation, that's been supported by HMO Treasury. I think we're just going to see a lot more of that kind of collaboration happening. I just think generally overall there'll be a tightening of within the ecosystem. So again, to your point, Andrea, there'll be less alternative finance providers and mainstream lenders. I think it'll all start to come together in a much more succinct way. And I think that we will start to take more of this kind of digitized approach. Everything is automated, less paper driven, real time, because I also think that's what people have come to expect based on CBILS and how quickly that was implemented, how quickly funds were released to customers. So I think from that perspective, we can learn a lot from the last 12 months, but it's almost like the world is your oyster in terms of where we can go over the next 12 to 24 months by really harnessing the amount of data that we all individually here, I guess, have access to. And it's just utilizing that consistently to present the best options to SME in terms of lending and taking a more sustainable approach as well. I think that's one of the things that Satago really wants to focus on this year, because, you know, invoice financing can often be seen as just a short-term gap, but let's try and do, or a solution for short-term cash flow, let's try and present something that is more sustainable and has that longevity to help the SME to get into that next stage of growth. So that will be a key driver for us this year, I think.
Yeah, fantastic. I think that's that resonates with everybody. I can see everybody shaking their heads. The sustainability factor is something that I think is is really prevalent. It's massively important going forward. We may not have time to drill into it too much today, but maybe that's a session we can set up for a future time. I think the other point that you know, talking about the banks and the interplay with the banks, you know, we've seen in the sector, I think a couple of the well, I'll call them alternative finance providers for now, but a couple of actually, you know, they won't be undertaking any new lending going forward, which I think is a big shame. But there's very much a link there with the interplay with banks, and the fact that through the government schemes, for good or for bad, the banks now have incredible exposure to SMEs, albeit with government backing, and you know, the appetite perhaps to play in the sector maybe is somewhat less than it was before. So where they've got vehicles that weren't necessarily aligned with their traditional models, unfortunately those vehicles are no longer with us. But we're obviously going to see, I think, some more twists and turns in that dynamic over the coming months. But going across to Chirag, again, talking about these big themes and what you see at Nucleus as being the key opportunities to really drive things forward in the next 12 to 24 months. What are they, sir?
I mean, it's impossible to not talk about open banking and data, but I think it's already been mentioned over half a dozen times. So I'll not repeat the whole thing, but very important and key to a lot of things we and everyone in the sector is building. So open banking is going to be there and is going to be part of every conversation. But apart from that, I think just in terms of theme, we conduct a lot of market surveys, both with the introducers and with the businesses directly. And the general thing that businesses, when we ask what are the things that they really look for, or what are the things that they really expect, and what we hear, what gets the biggest votes generally tend to be speed, clarity, consistency, and options. And if you just go through them in a bit more detail, speed in terms of literally the turnaround times. Many a times, for very basic reasons, the applications can be declined, but it takes 2 weeks to decline for those reasons. And it's very difficult for the businesses to understand why. So they want prompt responses and clarity in terms of the decisions. Why was the decision made? And I think majority of the lenders are trying to provide certain level of information, but probably not as much detail as what the market is looking for. And as non-bank lenders, with the technology suite that we have, that is something which we really need to make a much bigger contribution on. It is, and it to a certain extent also goes to another point where the non-bank lenders are still viewed as transactional. A bank is viewed as relationship. And as Andrea mentioned before, we shouldn't be alternative. But the reason we are alternative is because everybody looks at us as a transaction. It's one transaction. And that's an image we need to change. And we will change that if we are able to provide more information, more detailed information. It's got to be a relationship both ways. And we can do a lot more work. The whole sector can do a lot more work over the coming 12 to 18 months in changing that image. Now, and again, when we say consistency, is the same thing. Same application, if it comes 3 times, 10 times, should really get the same answer. It doesn't necessarily happen everywhere. So that is what drives a lot of frustration. And options, again, I think Sinead mentioned a bit of that, whether it's related to partnerships. If a lender can't support, is there a way they can introduce the business to other lenders who potentially can? Can we provide options instead of just a yes and a no? And I think a lot of the lenders have started that. We run an introducing business where if a business comes to us directly, not via introducers, and if we can't help them, we try to support them by introducing them to other lenders that we have relationships with, where we know their criteria are a bit different from ours, but it's about trying to find the right solution instead of selling a product. And a lot of lenders are getting on that mindset and are trying to implement that, and we'll see a lot more of that over the next 12 to 18 months.
Fantastic. Looking forward to it. So looking forward to it. Instead of open banking, maybe we go on to open finance, but maybe we'll do that one shortly. So Andrea, same question to you. The big themes, what are you guys focused on?
Yeah, it's interesting to hear the different viewpoints, and just they so resonate. To Sinead's point about the accountants, 150% that resonates. We did a survey and 75% of our accountants said that they'd seen a surge in their clients coming to them looking for financial assistance. We're actually launching Swoop with the Institute of Chartered Accountants for England and Wales on Monday for this very reason, because they identified that their practice members are moving more from a compliance role into an advisory role, because cloud accounting has moved on so much. We've got Receipt Bank, etc., that their normal compliance duties are reducing. And so therefore it's about moving them into a value add service. So there's a lot of work that we're doing with them in terms of educating accountants. There's two obstacles to why accountants don't move into this space or are reluctant to move into this space, and it's around their knowledge of products. So obviously we're solving that through our marketplaces. So knowledge of products, and also where does this fit within their professional body. So we've overcome both of those with the Institute of Chartered Accountants. So I think Sinead's right. We're going to see more of them taking that role of the bank manager, because that bank manager role is now diminishing. It also then speaks into Chirag's point about the banks having this relationship versus the lenders having just a transactional relationship. I think this is where open banking and just the dynamics of how banks are changing themselves. Bank services are beginning to unbundle. Now, they're probably not unbundling as fast as we all on this call would like them to, but the trend is there. Businesses and SMEs are beginning to realize you don't just use one channel for your banking services. And so as that starts to unbundle, that brand equity that the banks have had in the past will start to reduce, just like the relationship manager role is reducing and moving to accountants. So I think open banking, the fact that I know we keep talking about it, but I think digitization, SME digitization in itself is now going to be an advantage to everyone on this call, I think, because we're, as Chirag points out, we're offering better customer service and optionality to SME. So finally, you know, they have always been the segment that are underserved, overcharged, pretty apathetic as a customer base, and now they're realizing through digital solutions that no longer has to be the case. So I think I would absolutely concur with what the guys are seeing themselves.
Fantastic, appreciate that. Okay, so we're going to power through. We'll be coming to our Q&A session in just a few minutes. But looking ahead to the economic recovery in the UK, I'd like to know whether you're all optimistic that SMEs, the alt-fi lender community, FinTechs, all ecosystem participants, do you believe that they are going to show, or the conditions are right for them to show the required resilience to help power the economic resurgence? And do you believe that there is assistance required from elsewhere? It could be from government, could be from other industry organizations. Maybe I could put that question to you, Zoe, first, if you don't mind.
Yeah, sure. So yeah, I think kind of just echoing what the rest of the panel have said about kind of the perception and acceptance of digital lending and digital alternatives to the traditional banks is a really interesting space, and a really good opportunity for fintechs to be kind of building their businesses and kind of serving customers better. I think it's an interesting space where a lot of the kind of neo-banks have become very successful alternative banks. And actually, I think they're kind of getting, to Andrea's point, they're getting more into, well, I use Starling or I use Monzo, and that's my core banking option, rather than it being, oh, I have that alongside my traditional bank. So I think kind of, yeah, echoing that point of how can we kind of be seeing technology-led finance companies being a great option for small businesses to access the best possible product for them, and it being kind of using data, using kind of the technology available to provide that better service, where a traditional bank might kind of historically have been seen as the best partner and they know me the best. I've been a banking customer with them for 10 years, but actually is that bank able to kind of process that data and do the best possible thing for that customer? They're probably trying to kind of manage other products, other customers, other sort of challenges. So kind of how can technology, kind of fintechs be kind of stepping forward, I guess, and being able to have an opportunity to be serving small businesses in the best possible way, and with those kind of more customer-led products that are kind of providing the exact product and service that those customers are looking for. And I think we're in a really good opportunity to do that because of our ability to kind of be lean, to be leveraging technology in the best possible way. All of us have talked about how we've adapted our businesses over the last 12 months. And I think that adaptability and kind of openness to change and evolving means that alternative lenders and kind of lenders, smaller fintechs and technology companies in the space do have a really good opportunity in the next 12 to 18 months, for sure.
Fantastic. Dare I ask, does Capital on Tap have a view as yet around the recovery loan scheme? Are you disappointed to see the end of Sibbles and Bibbles, and how are you viewing the new norm?
I'm probably not the right person to be kind of answering that. I've been off adventuring and doing the US and Spain. I think we are looking to be added to that panel, and we'll be going through that process to be involved. Yeah, it's an interesting one. It's providing additional support, but kind of how do we balance that with our core business? So yeah, I'm probably not the best one to answer that.
It's all good, don't worry. Chirag will give me a very pointed opinion. Chirag, from your perspective, it'd be great to understand Nucleus's stance, I guess, in relation to the recovery loan scheme, but then just more broadly, how do you see the sector? How do you see the level of resilience for the sector going forward? And would you like to see assistance come from elsewhere? Obviously, we've already touched on the different way that lenders such as yourselves are viewed versus the banks. But are there any other insights you'd like to call out there?
Yeah, I mean, I can probably split this thing in three parts. If you look, I mean, as Zoe mentioned, and I agree with her, that as a tech-focused lender, going forward, everybody needs to start planning to a certain extent about the government-backed loan programs coming to an end at some point. Doesn't look like in the foreseeable future, but still, if you look at about less than 20% of the businesses are qualifying for the government-backed programs, especially the non-bounce-back loan programs. So there is still 80% of the businesses out there looking for some or the other form of lending or some or the other form of funding. And we are best positioned with the tech and with the data to offer those solutions. And I think we as a business have been doing quite a bit of it, coming up with new products. And I think being a tech-enabled, data-centric business, it's great in this environment because the product can be very nimble. The way things are going, the way things are progressing, you're talking about things rapidly changing every quarter. And we can't have a product that we are looking at once a year or once every 2 years to see what tweaks need to be made. We need to take the economic recovery into account. We need to take the business requirements into account and our risk profile and the changing risk profile into account and be very nimble at changing products very quickly. So I think as lenders, that is something we are very focused on. I think at the same time, again, I'd just like to come back to the point around why alternative. And I think with the government-backed programs and the amount of money dispersed by the non-bank lenders, it clearly shows that we can originate large volumes. We are reaching out to the customer, even though there is a perception issue which we need to resolve. I think now is the real challenge. Getting funds out to customers is one part, but at the same time, servicing those customers, collecting that capital and bringing it back, it's a separate part. And with the amount of lending done, I think a lot of lenders will have to clearly show that they can actually do that as well as putting the funds out. And I think how we perform on that side, how all the lenders in the sector performs on that side, will go a long way in bridging the gap between the alternative label and the non-bank lending label. and that a lot of it is going to be on us on how we are going to act over the next 5 years, really. So it will be an interesting few years now on that front. Just coming back to RLS, we are looking to participate in RLS. We were a significant player on civil side, and we think there is going to be a lot of demand on the RLS side as well. And we want to continue supporting businesses who are looking for the government-backed loans and who qualify for the government-backed loans. And again, just coming to perception, one thing where I think there can be more support, and we noticed a lot of it with civils, was a lot of these programs sometimes are done with the banks in mind. And the non-banking sector is really kind of an afterthought. And then there are changes made to accommodate the non-banking lenders based on the feedback that we all provide either directly or via Innovate finance groups, right? So that, I think the way we manage these loans will go a long way going forward, where our opinion is taken on board a lot earlier while designing the programs, rather than us being just an afterthought and only the banks being taken into account. So I think that's where a lot of support will be helpful, or a lot more support will be helpful from the government in terms of early involvement.
Fantastic, appreciate it, Chirag. And maybe just words. We got a question. I thought it's quite pertinent to bring it in now. But Brendan Gilmore has asked the question: given many non-bank lenders rely on wholesale lines from banks, how does the panel see the outlook for funding? So just wondered whether or not you have a view on that before I pass across to Andrea.
Yeah, so from our side, we rely on funding from banks, but also there is a whole alternative capital market developing. When we say non-bank lenders, we are talking about FinTech lenders. We have got loads of funds, you've got loads of insurance companies. So not just the banks who are very active right now, wanting exposure to the UK SME space. So the number of funding options are quite varied rather than just the banks. I think there is a lot of capital. I would say if the same question was asked 5 months ago, the outlook was a bit different. There was uncertainty because of COVID, and there was uncertainty because of Brexit. At that time, a lot of capital was still waiting on the sidelines. But I think once Brexit got finalized, and now with the vaccine rollout program and everything looking positive, a lot of that capital is looking to get deployed. So there is funding available.
Fantastic. That's really good to hear. Very promising. Okay, so Andrea, across to you again. Given the number of options effectively that Swoop gives its customers, obviously the equity side of things, grants as well as regular finance solutions. How do you see things playing out in the coming months? So do you see increasing resilience? Are there areas where you would have some concern, and also perhaps an opinion also on this funding question that's been raised?
Yeah, I guess just on the funding, the recovery loan scheme, and to Chirag's point in terms of it feels like it was designed with the banks in mind. That's because this has been the greatest marketing effort of the government. This scheme is a complete rehash of what was 20 years ago, the small firms loan guarantee scheme. Then it turned into the enterprise finance guarantee scheme. Then it turned into civils, and now it's turned into, literally, if you look at the fundamental design of the scheme, it's the exact same one. And so it hasn't moved on, and it is banks first because it's the exact same one. And I mean, the civils one came out so early because it was originally going to be the hard Brexit loan scheme. And then they just renamed it again. So, I mean, it's like, oh, that one again. What the only differences are suddenly you need a PG or there's no interest-free period, but it's the same scheme. So yeah, a little bit of creative thinking and maybe some more data analysis from what Nucleus and Citago and all the guys are able to provide to the government. Maybe we can move into looking at more creative solutions moving forward. In terms of resilience and what does that look like? I don't think we can batch SMEs into the one category for the coming years. We have, we always talk about the north-south divide. We are in, and it's happening already, and it's going to get worse. There is a huge divergence in terms of winners and losers in the SME sector now and into the next year. You can only have so much resilience if you have a tsunami of negative trading conditions coming at you. So if you're a manufacturer, exporter, coping with COVID, trying to cope with the new trading rules around the new trading agreement, trying to find new export markets, trying to understand the rules of origin. Does anybody understand the rules of origin? You've got all of that ahead of you. So I think resilience, where the government intervention needs to improve, is actually manufacturing, trading of goods, exporters. Saying there's a £20 million fund to cope with that is I personally think just a little bit insane, and will require further funding going down the field. I think resilience in terms of hospitality services, etc. Yes, we're all expecting that massive bounce. So great for that. The actual finance sector, I think, as the guys say, there's lots of capital there. We will have, I think we'll see some consolidation in the market. We will have had those who were very, very highly challenged during the time when bounce back was the only product in town. So I think we'll see some of that. But all in all, I have an overarching optimistic view, don't we all? We're all entrepreneurs at the end of the day. So I have an optimistic view. I'm sticking to reading the Bank of England reports on the huge recovery we're going to have. And yeah, I would say the little bits of concern, apart from those sectors that I've mentioned, is the level of indebtedness. And what we have now is a lot of permanent non-borrowers are now borrowers through choice. They may remain borrowers and become very mature borrowers in the future, but that's the bit I think we will need to watch moving forward, and especially in the next 12 months.
Fantastic. I'm loving your take on the recovery loan scheme. Sinead, I think your sound may have dropped out. Are you back in the game?
I think I am.
You are.
Okay.
Good. So over to you for your views on anything from lender funding lines to the recovery loan scheme to resilience in the sector, and there are a number of questions that people can see also filtering through now in the Q&A. So we'll come back to some of those, but over to you.
So I think I agree wholeheartedly with what Chirag and Andrea have said. I think if I look at like where we're going in the next kind of 12 to 18 months and how we transition to this and how we help SMEs, I think one of the biggest issues that we have is that SMEs have now got debentures and PGs in place for lending they need it and borrowing they need it to get them through the last 12 months. So now it's about how do we as lenders help them in an imaginative way to really grow those businesses and to help them, because we need them for the economy to grow, right? So it's how do we get them and propel them into the next 12 days.
Oh, your sound has dropped out there again. Don't worry, Sinead. I think she may have dialed off. Yeah, she's dialed off. All good. So we'll quickly turn our attention. There's a couple of questions that have come through. So I'm going to fire these out at will, if that's okay, to my panelists. Be ready. So the latest question to come through. So how do you think SMEs will be able to finance exports more in the current environment? Chirag, I wonder if you might have a word to say on that, sir.
I think on the export side, it is going to be challenging. If it's EU related with Brexit, there will be more bespoke solutions. It's very difficult to have a single solution for that, but there are lenders who are specifically working on that side. On the trade finance side, there have always been lenders supporting that. And in general, on the invoice finance market as well, there are more people looking at export debt as long as they can get the right insurance cover in place. So with the right insurance cover, there will be funding available.
Great, fantastic. I will, because we've got a number of questions, I'm just going to go through to a different question now. So we've got another question that's come through. It's a point followed by a question. I think the government and the regulator is due to respond to the open finance consultation from last year pretty soon. What would the panelists like to see in there? Maybe I can start with you, Andrew, and then pass across to Zoe. Expansion
of the premise of open banking. The more the better, as far as we're concerned, of course, as far as all of us are concerned. As far as the customer, unbeknownst to them, is concerned. I mean, open banking, I think there was so much cynicism around it when it launched, and we'll all remember 2018 when it was all the API standards weren't exactly standardized. It was all a bit like, oh, let's try and keep this thing on the road, and it's now growing and growing in not just in the UK, but now we're exporting open banking to international markets. So I think, you know, it was the one that had to sort of push through the barriers. But now I think government and I think that the customer is beginning to see the benefits of being able to securely share your data. So for me, I just hope that they expand. Well, we know they're expanding open banking in itself, but out to more products, but also into, as we know, open energy, open communications, etc. And I think we need to be mindful. Simon, you'll probably appreciate this. We need to be very mindful of not just thinking about banks as holders of data or energy companies as holders of data. There are cloud accounting softwares that are holders of data, and one such accounting software called Xero, who are behaving like the big four banks used to in the past by saying they own the data. So I think if we're all going to sign up to the spirit of open finance and that the customer owns their own data, and the customer should be able to utilize that own data and share it securely with whatever providers they want to get the best options for their business, then that's how it should be. So we're putting in submissions to make sure that, you know, it's a little bit like GDPR. I don't know whether we've seen, but the European commissioner who designed GDPR said, it's now out of date. We're going to have to go back to the drawing board again because we never took machine learning AI into account when we wrote GDPR. It's the same thing with open finance. We're writing it for the construct of how things are today, and we're missing where are the trends of actually where people will be storing their data and hosting their data, etc., and making sure we include those guys within any new legislation that comes out. So that's my take on it.
I definitely do appreciate that. Absolutely. Couldn't agree more. Zoe, what about from Capital on Tap's perspective? What would you like to see included?
Yeah, totally agree on Andrea's point of just kind of, it's been such an amazing tool that has come out over the last couple of years. And it was originally, it was kind of, let's drag everyone along and consumers are not going to like it. This is all very new, and it's those security issues and privacy issues. And I think over the last 12 months, it has had an opportunity to really kind of grow in awareness. People are a lot more receptive, people are understanding it more and seeing the benefits. So I think it's particularly on kind of the finance institutions to be using that data in really positive, proactive ways as well, and kind of allowing the consumers to see what kind of benefits there can be from that data being their data, and how do they kind of use that in a positive way. I think it's just about continuing to get that message out there to customers, I think, and how do we build that perception that it's a really positive tool and can be really beneficial. There's a really interesting piece in open banking around payments as well. It's something that we're looking at quite a lot, and how can we improve the customer experience through being able to process open banking payments as an alternative to direct debits and debit cards too, which is a really cool space where trying to look at kind of continuous authority of those payments is an interesting one. So that's kind of one on our radar as well.
Brilliant stuff. Appreciate it, Zoe. We're going to end with one final question. This is, in my eyes, this is quite a fun question. So obviously, no pressure on panelists to disclose what they don't want to. But the question is: so with Capital on Tap expanding into the US and Spain, are the other panelists looking at other international territories and markets to launch in? And I think actually Sinead had to drop off just for the benefit of the participants listening. But yeah, maybe Chirag, well, in fact, I think everybody is operating in international waters, but Chirag, starting with you, what are your plans for world domination?
We have looked at various markets. I mean, in the short term, we are still focused on the UK market, but we are actively looking at all times.
Got it. Very cryptic, but I like it. Andrea, how about from your perspective?
Yeah, we operate in Ireland. Obviously, we are, can you hear from my accent? Why? So that's as far as we've gone in Ireland so far. And yes, we will absolutely be looking at international expansion. I think there's more to do here in the UK market, but I think the UK is such a wonderful launch pad, isn't it, for a fintech? The reputation of the UK for fintechs will help us all in our international expansion. So yeah, of course it's on the radar.
Fantastic. And I'll chime in for funding options. So we're already operating internationally in the Netherlands, and yes, very similar to Swoop, we have our eye on a number of markets, same as Chirag, and yeah, I'm sure we'll be exchanging viewpoints on that at some stage soon. But realizing that we've run out of time, so thank you to everybody who is still listening. Huge thanks to the panelists. So Andrea, Zoe, Chirag, obviously Sinead had to drop off. Great to chat to you guys. I'm sure I'll talk to you all soon. And thank you again for joining the Spotlight on SME Finance. Have a great day, everybody.
Thanks for having us.
Thank you.
Cheers. Bye-bye.